Evan, we talked about oil and we talked about how it has been back and forth a little bit. With oil, it's started down on Monday on these debt ceiling fears. The concern here is that if we do some kind of default or maybe not pay some of these bills, that consumers are not going to need as much oil. They're not going to be able to spend as much, making trips and such. So oil's down a little bit this morning, but that doesn't mean that the oil stocks are down. So let's talk about that ETF, that OIH.
Let's talk about the OIH here. What I have here for us to look at is the weekly chart, and I think the weekly gives the clearest picture, the clearest perspective on what's happening here. We had a large rise in price mid-2010. For most of 2011, we've seen some pullback and some contraction. Well, we broke out of that pullback. You can see here clearly breaking out over the last week, 2 weeks or so. Energy stocks, they're back in play, and I think they need to be watched going forward. As there's really nothing that tells me that we can't see prior highs back here in the OIHs right around 160, mid 160s. Let's take a look at the daily here just to get a better shorter term perspective. There's the breakout we saw. We saw volume come up. Short term, little extended here. Wouldn't be a buyer. Wait for a consolidation. Wait for a pullback. You're going to have less risk if you're looking to get involved with energy and particularly the OIH. Better risk reward scenario. Wait for that pullback.
All right. How about if you're bullish? If you've got that energy bull, the ERX.
Mm-hmm. Let's take a look at that ERX. Same thing, almost identical to the OIH. Really nice buying here over the last couple of weeks. Nice move off of the 60. We saw a pullback into the 200 EMA where buyers stepped in, and we are now back to that 86 level. Just a stone's throw off prior highs. Again, the smart trade here in energy is wait for that pullback. This business, whether you're trading energy, you're trading tech, you're trading anything, it's all about risk assessment. And at these levels right now, after short-term pops, you don't want to chase. Chasers never make money trading. The traders that make money, whether you're trading the energy or you're trading the tech or whatever it is you're trading, are the traders that are a little more patient, wait for good setups, buying dips. Strong stocks, ERX, wait for a dip.
All right, let's talk about Halliburton. This company reported its earnings last week. They were amazing, these earnings. The numbers were out of control. North America they knocked it out of the park. They're doing all this crazy alternative drilling and fracking, and they're making a ton of money regardless of the price of oil.
Right. Yeah, they are. I mean, and the stock here definitely reflects that. Halliburton here on the weekly.
Wow.
Breaking out, no signs of slowing down. It was in basically the entire 2011 here. We saw a nice tight consolidation, not much forward direction. Mark it off here, you can see a nice base that was built, multi-month base. Breaking out of that multi-month base, this is a stock that tells me it could potentially go significantly higher, and there's really no slowing this down. Now, that doesn't mean you want to be a buyer here or now, but you do want to keep an eye on Halliburton, as this usually will portend to another slingshot type of move, potentially into the mid-60s, even 70s.
All right, it's Buddy Baker Hughes also did very well, so let's take a look at that chart.
Baker Hughes, same kind of concept here. Look at the weekly. I think the weekly tells the best story. A nice multi-month base here in Baker Hughes. New highs as of the end of last week at $80. And really nothing that tells me the stock is ready to slow down. Short term, we might see a little bit of a pullback here into the, 76, 77, 77 and a half area, which would probably be a better setup to be a buyer. But really, a lot of strength here. Respect that.
All right, Evan, let's go to those